Act 1, The Illusion of Power. In modern governance studies, there is a persistent myth that authoritarian regimes are held together. We look at military parades, armored personnel carriers rolling down wide boulevards, and soldiers in uniform standing tall, and we assume that power is a ballistic force. We assume that as long as a government holds a monopoly on violence, it also holds a monopoly on the future. This is a fundamental misunderstanding of how nations survive. Regimes do not collapse primarily because of ideology, and rarely solely because of external pressure. Regimes collapse because of accounting. When we look at the trajectory of Venezuela under Nicolas Maduro and project that trajectory to a hypothetical endpoint in 2026, we are not looking at a political revolution in the traditional sense. We are looking at a balance sheet bankruptcy event. We are seeing what happens when the variables of patronage mathematics finally run out. Consider the separate considerations of the Venezuelan state. This country possesses the largest proven oil reserves on the planet. It's bigger than Saudi Arabia, bigger than the United States, bigger than Russia. It has vast hydroelectric potential, fertile agricultural regions, and a historically educated workforce. By every measure of resource allocation, Venezuela should be the Norway of Latin America. It should be a sovereign bastion of wealth, immune to the fluctuations of the global market. Instead, the last decade has provided economists with a troubling, real-time environment for systemic failure. We've seen the economy shrink by almost 80% in peacetime. We've seen a currency lose 13 zeros. We've seen the middle class wiped out, not through war, but through the weaponization of monetary policy. To understand the hypothetical collapse in 2026, we must stop looking at Maduro as a political individual and start looking at him as the CEO of a bankrupt holding company. A dictator, at his core, is the manager of incentives. He has to pay the military to keep from shooting him. He has to pay the civil servants to do the paperwork. He has to pay the subsidies that prevent the people from completely revolting. For years, the Maduro regime managed this through a complex game of debt exploitation and illicit financing. But every game has a mathematical limit. There comes a certain point when the cost of maintaining loyalty exceeds the state's current revenue. This documentary is a forensic audit of that particular moment. We are not here to debate the moral aspects of socialism and capitalism. We are here to observe the flow of capital, or rather its impact. We will examine the crumbling infrastructure not as a tragedy, but as a depreciating asset that can no longer generate returns. We will analyze hyperinflation not as a statistic, but as a social control mechanism that ultimately backfires. We are looking for the point of no return. In financial forensics, this is often called the Minsky moment, the point at which the credit cycle breaks and asset values collapse because debt is no longer repayable. For a dictatorship, the Minsky moment comes when soldiers in the barracks check their bank accounts and realize that the regime's currency can no longer buy their loyalty. Next comes an analysis of how a nation with unlimited resources created its own poverty, and how the irresistible force of economic reality ultimately shattered the unshakable object of totalitarian power. This is an autopsy of a collapse foretold in the book. Item 2, the oil trap. To understand bankruptcy, we must first understand existence. For the entire 20th century and the beginning of the 21st century, the Venezuelan economy was not a diversified marketplace. It was a single, massive gamble on the price of a barrel of crude oil. This is often referred to in economics textbooks as the resource curse, or the paradox of abundance. The theory posits that nations with abundant natural resources tend to have less economic growth, less democracy, and worse development outcomes than countries with fewer natural resources. But Venezuela's case goes beyond a curse. It's a matter of the systematic elimination of technical capacity. The critical mistake wasn't simply relying on oil. There was a fundamental misunderstanding of what the oil industry actually is. There's a misconception that oil production is passive income, meaning you simply drill a hole in the ground and wealth springs forth. In reality, Venezuela's oil belt, particularly the Orinoco belt, produces very heavy crude oil. It's thick, viscous, and technically difficult to extract and refine. It requires continuous and significant investment in technology, diluents, and specialized engineering. When the state systematically purged the technical class from the state oil company PDVSA in the early 2000s, it replaced engineers with political appointees. Politically, this made sense. It consolidated control. Economically, however, it was a dangerous undertaking. For several years, high global oil prices masked the decline. When a barrel sells for $100, you have the power to be inefficient, neglect maintenance, and shift profits for political cronyism. The income is so high that it hides rusting pipes and malfunctioning pumps. But markets are cyclical. When the oil price collapsed in 2014, the tide receded, and the state's corruption was revealed. Production fell not because the oil ran out, but because its ability to extract it self-destructed. Let's look at the opportunity cost. Analysts estimate that Venezuela lost hundreds of billions of dollars in potential revenue between its peak production years and the current period of collapse. This is capital that has vanished into thin air. Investment in diversifying the economy was neglected. It wasn't invested in a sovereign wealth fund like in Norway or the Gulf states. It was consumed by urgent operating costs and corruption. This created a dependency trap. The government had no backup plan because the Dutch disease phenomenon allowed all other sectors of the economy, agriculture, manufacturing, tourism, to collapse through a strong currency killing domestic exports. When oil revenues failed, there was no tax base to back up to. The regime found itself in a cash flow crisis. They had the world's largest reserves, but they couldn't convert them into cash quickly enough to pay their bills. They were like a billionaire with a huge mansion, but no money to pay the electricity bill. And in geopolitics, you can't pay your military with potential future income. You have to pay them with liquid assets today. The failure of this primary source of income forced the regime to quickly seek elsewhere. And if a government can't tax its citizens because they are poor and can't sell its resources because its infrastructure has collapsed, it turns to the only tool left, the printing press. Article 3. Hyperinflation autopsy. When a government runs out of money, it faces a dual choice: to be frugal or to inflate. This is a political risk. On the other hand, inflation is a way of taxing the people without legislation. This is taxing the cowardly. The Maduro administration chose the printing press. This was followed by one of the most severe periods of hyperinflation in recorded history. But we need to move beyond the astonishing percentages. Figures like 130,000% inflation are so large they become abstract. We need to understand how this destroys the foundation of a regime, its system. Money relies on a concept called velocity. In a healthy economy, money changes hands at a predictable rate. In a high inflation environment, it accelerates wildly. People realize that the money in their pockets is a melting ice cube. If they wait a day, it loses value. If they wait a week, it becomes completely worthless. So they spend it immediately. This behavior creates a feedback loop. The faster people spend, the faster prices rise. The government responded by printing higher value banknotes, further fueling the panic. For the regime, this initially served a purpose. It allowed them to pay off their domestic debts with a worthless currency. It enabled the middle class to effectively liquidate their savings and transfer that wealth to the state. This was a massive and unauthorized seizure of private property. However, high inflation has an endpoint. It destroys the very act of pricing. A shopkeeper cannot stock shelves if they don't know what the cost of replacing a loaf of bread will be tomorrow. Supply chains collapse. This is where the Maduro diet ceased to be a troubling joke and became a macroeconomic reality. The shortage of goods wasn't just about sanctions or sabotage. It was the logical consequence of a currency that could no longer provide information about value. The destruction of the bolivar necessitated a phenomenon known as spontaneous dollarization. The regime resisted it for years, condemning the US dollar as an instrument of the enemy. But economic gravitational pull is as stronger than political rhetoric. Eventually, the market completely ignored the government. Shopkeepers, taxi drivers, and even corrupt police officers began demanding foreign currency. In 2019 and 2020, the regime surrendered. They allowed the circulation of the dollar. This briefly stabilized the chaos, but created a new and deadly problem for the dictatorship. Dollarization deprived the regime of its monetary sovereignty. They could no longer print dollars. They needed real cash to pay their bills, to pay the army and public employees. They could no longer simply add zeros to digital bank accounts. This changed the regime's fragility. During the Bolivar era, they could pay off their domestic debt through inflation. In the dollar era, they were subject to strict mathematical limitations. Every dollar paid to a general had to be earned through exports or illicit trade. The margin of error was reduced to zero. This transition transformed the Venezuelan economy into a predatory entity. Because the state could not generate wealth, it had to acquire it. It began depleting its gold reserves, selling family heirloom silver to survive another month. This is the behavior of a company in liquidation, not a government in operation. Item 4, infrastructure failure. If the currency collapse was a software failure of the Venezuelan state, the infrastructure collapse was a hardware failure. An economy exists in the physical world. It requires electrons passing through wires, water flowing through pipes, and trucks moving on the asphalt. The nationwide power outage of 2019 wasn't an anomaly. It was a signaling event. It showed that the system's entropy exceeded the state's capacity to reverse it. Infrastructure requires what economists call sustainable capital spending. You need to continuously invest money to keep a grid performing at the same level. If you stop that investment for 5 years, you see deterioration. If you stop it for 10 years, you see collapse. The power outage revealed that the regime had plundered sustainable capital. They had treated the electricity grid as a free resource, ignoring the second law of thermodynamics. When the grid collapsed, it crippled the oil industry and further reduced revenues. It exacerbated the hunger crisis by destroying cold storage facilities for food. It turned manageable health problems into death sentences by shutting down hospitals. But from a legal standpoint, the infrastructure collapse signaled something even more dangerous for the regime, the loss of competence. A dictatorship is based on an implicit agreement. I will restrict your freedom, but I will maintain order. When the lights go out and remain dim, the state has breached the contract. This shows the public, and more importantly, the security forces, that the leadership is not only corrupt, but also incompetent. In authoritarian systems, corruption is often tolerated. Incompetence is deadly. The decay of physical infrastructure meant that any attempt to restart the economy would require massive upfront investment. You can't reopen oil wells, you need to rebuild the power plants that feed them. You can't restart agriculture, you need to rebuild the roads to get the produce to market. This created a financial chasm too deep for the regime to overcome on its own. They needed foreign capital. They needed billions of dollars in loans and direct investment to rebuild the country's infrastructure. And this brings us to the legitimacy trap. To get that money, you need access to the international banking system. And to have access to the banking system, you need to be recognized as the legitimate government. Article 5, the election trap. By the mid-2020s, the Maduro regime faced a tough challenge. They had survived coup attempts. They had survived street protests, but they hadn't survived isolation. The sanctions imposed on Venezuela were not only punitive, they acted as a barrier to global capital. No rational investor, from Wall Street to Shanghai, would invest billions of dollars in infrastructure projects in a country where the legal framework was non-existent and the government was under accusation. The regime needed a reset. They needed to clear their reputations to open the coffers of the IMF, the World Bank, and Western oil giants. This explains the logic behind the negotiations leading up to the 2024 elections. Analysts argue the regime was gambling. They believed they could orchestrate a managed election that appeared competitive enough to satisfy the international community, but rigged enough to ensure their survival. They hoped to trade a small political advantage for a significant economic relief. This was a catastrophic miscalculation. When the opposition effectively organized and the vote difference became undeniable, the regime was cornered. They had to choose between two forms of death: political death by accepting defeat, or economic death by stealing the elections in broad daylight. They chose the latter. By falsifying the results and refusing to release the data, they not only angered voters, but also destroyed their exit strategy. The reaction from global markets was swift. Eased sanctions were reinstated. Oil companies' operating licenses were jeopardized. The risk premium for doing business with Venezuela rose forever. This was the point of no return financially. By destroying the last vestige of electoral legitimacy, the regime ensured that no new capital would flow into the country. They were locked in a room with a dwindling oxygen supply. For the domestic circle, the financiers, the generals, the bureaucratic elite, this was an illuminating moment. They realized that as long as the current leadership remained in power, they would never be able to spend their money, never be able to reintegrate into the global financial system. They would remain as outcasts, trapped in a ruined country, watching their stolen fortunes depreciate in value. Legitimacy is often debated in moral terms, but in this context, it is a financial asset. It is the collateral required for credit. By destroying it, the regime ensured its permanent bankruptcy. Article 6, Military Calculation. Now we come to the final calculation, the loyalty of the armed forces. There is a romantic notion that armies turn against dictators because of human rights violations or a sudden awakening of conscience. History reveals a colder truth. Armies switch sides when the logistics of loyalty break down. The Venezuelan army is not just a fighting force, it's a holding company. For years, the regime has bought loyalty by giving generals control over key sectors of the economy: food distribution, oil logistics, mining, and imports. This worked as long as those sectors were profitable. But let's examine the figures for a hypothetical scenario for late 2025 and early 2026. The oil sector is stagnant, paralyzed due to a lack of foreign input and capital. The drug trade, the Sun cartel, is under immense pressure due to increasing sabotage and global surveillance. The domestic economy is a hollow shell. Gold mining in the Amazon yields diminishing returns and draws significant international pressure. It creates revenue streams that feed the patronage network. At the same time, the cost of repression is rising. Fuel, food, and equipment are needed for the lower ranks to keep the population under control, but the lower ranks also suffer from the same economic misery as the civilians. A soldier whose family is starving is a liability, not an asset. The generals at the very top face a prisoner's dilemma. If they remain loyal to the regime, they sink with the ship. Their assets abroad remain frozen. They face potential extradition and prosecution. However, if they facilitate a transition, there is a possibility of a deal, a chance to preserve some assets, a chance to escape a cell in a super maximum security prison. In the scenario we envision for 2026, the catalyst is not a single protest or a foreign invasion. It is an unpaid paycheck. It is the moment when the central bank can no longer approve transfers to military accounts because its foreign exchange reserves have effectively reached zero. When the money supply chain breaks, so does the chain of command. This is military calculation. This is a risk assessment. The regime falls when the military leadership decides that it is no longer the guarantor of their survival, but the primary threat. The collapse appears sudden to the outside world. One day the regime exists, the next day it is gone. But in reality, the foundations have been rotting for a decade. The final impetus is simply gravity kicking in. Article Conclusion. In analyzing the wreckage of this economic catastrophe, we must be careful to distinguish the symptoms from the negative ones: hyperinflation, shortages, power outages, the displacement of millions. These were the symptoms. The disease, however, was a political system that believed it could override the laws of the economy. The collapse of the Venezuelan regime is a troubling event for the 21st century. It teaches us that natural wealth cannot replace sound institutions. It shows that you cannot build a prosperous society on a foundation of exploitation and patronage. But most importantly, it reinforces the legal reality of governance. The balance sheet always wins. You can manipulate the courts,
silence the press, and imprison the opposition. But you cannot arrest the laws of supply and demand. You cannot imprison mathematics. Ultimately, the collapse of the regime was not written in a manifesto. It was written in a ledger. The bankruptcy of the state made the continuation of tyranny impossible. For the Venezuelan people, the end of the regime is not the end of the struggle. The economic devastation is so profound that rebuilding will take a generation. Confidence in the currency, physical infrastructure, the fleeing human capital, these won't return overnight. But the first step to solving a problem is to acknowledge its true nature. It wasn't bad luck, it wasn't a conspiracy, it was a bankruptcy. And like all bankruptcies, it ends when the creditors, in this case reality itself, come to collect their dues. That's the end of another video. See you tomorrow. Please don't forget to subscribe.